Hello and welcome to Crypto Weeklies. In this video, we analyze Solana, conduct machine learning based price forecast, regression analysis, recent valuation, and much more. Let's get started. None of the content is financial advice. Over the last key performance periods available on cryptoweeklies.com, link on the bottom of your screen. All the charts and insights are available for free. You don't have to pay or sign up for anything. Under the heat map, over the last 24 hours and over the 7 days, Solana has performed uh, average better than average, leads over the last 24 hours worth of rally, about 2.5% up over the last 24 hours, or the last 7 days up by about 3%. So has been moving in the right direction in this late stage of the bull run. If you look at the Fibonacci levels and the recent correction that Sol had from its 2021 all-time high, it did go slightly higher than to $260 this time around. But again, no weekly closes or candle bodies above the previous all-time high. Did only spend a handful number of days at that level. Now since 260 upwards of about $290, that was the latest all-time high for Solana. From that point, the decline has been more than 50%. Had it been from 260 to 130, that would have been exactly 50%, but now it's more than that. So the key level to watch for Sol as it rallies from its recent low of about $112. The key level to watch is the 0.5 fib level coming in at around $134. If Sol makes to that level and holds that as support, the next level to watch is $164 and subsequently the $206 level. Coincidentally, the $206 is fairly close to the 20-week moving average, coming in at around $199. If let's say Sol takes couple of weeks more to get to that point, at least the 21-week EMA right now, which is at around $177, could be somewhere close to that 164 target level, because EMAs move faster than SMA. Again, they are exponential in nature. So again, that could be a area of confluence at around $164 if there is a counter trend rally in this short term. If we look at the machine learning based price forecast for Sol, this is again developed at a weekly price action, looking at the weekly price, hence the name Crypto Weeklies. Since the token launched in about April 2020, this data, the weekly price action data, along with the market cycle data, is fed to the machine learning model trained on price action and techniques such as ARIMA, SGBoost, and LSTM. The three scenarios forecasted by any machine learning model are the scenarios that a risk asset could do majorly are they go up or down or stay sideways. Again, the model tries to identify the magnitude of these moves using historical data and market cycle theory. So by that I mean that in the bull case, this yellow line represents a 1 standard deviation or 68 percentile confidence level ceiling. That means per the model, there is a 68% chance in the bull run that the price action over the next 6 months stays between $147 and $307. That's the 68 percentile non-euphoria bull case for Sol. The euphoria case is the 95 percentile bull case, which is again with 95 percentile confidence or 2 standard deviation confidence. The price staying between 100 and per this model in the next 6 months, between $160 and about $522. So that's the 2 standard deviation euphoria peak for Sol for this bull run. The pink line, which is the base case of our machine learning based price forecast, again, that's the trend behind the trend, the directionality, if you like to call it that. What is the price likely to do when it is devoid of any sentiment of or any extrinsic market cycle related variables? So that's the pink line, which is the base case forecast for Sol. Again, all things equal, the price has a higher likelihood of trending up with time than down with time. Again, you could make the case, since the launch, Sol has gone from less than 50 cents to now upwards of $100, and has had a series of higher highs and higher lows over the macro time period. The third line, which is the green line, which says that instead of a bullish market, if the market forces turn bearish, what could be the theoretical floor? over the next 6 months, if there is a downturn in the market with 1 standard deviation confidence level or 68th percentile, bear case for Sol is price going as low as again the maximum permissible lowest bound over the next 6 months. With this 68th percentile model is price action could trade if the downturn stays for the next 6 months between $70 and $121. If let's say there is only a 3 months worth of downturn, that is the remainder of March, April, May, and potentially middle of June, then the price could have support at around $80. So that's the hypothesis or the interpretation of this machine learning based model. Again, all things equal, if we consider that right now, if considering the last post halving year, that which was the first post halving year for Sol, and again for altcoins it was the second major post halving year, prices did trend up more with time, that higher with time, that is, than lower with time. Again, there is always an exception that this time around the that kind of rally happened early on, that is in 2023 and 2024. But again, if there is even if there is a lower high for Sol over the next couple of months or so, that 1 standard deviation bull case with that maybe capping the price at around 256 or 200 around the $260 level could be a target to see per the machine learning based model. The regression based analysis for Sol says that right now the price action for Sol is lagging behind the fair value. So per this model, Sol is undervalued. The fair value per the polynomial regression analysis for the weekly candles for Sol since inception says that at $321 the token is at fair value per its interpretation. If we apply a 1 standard deviation residual to the fair value, you would see that this model did an excellent job of identifying the bear market bottoms. Again, this is not some retroactively fitted model, that was available live. We made several videos related to Sol over the course of the bear market. Again, if you can check, this is the YouTube channel, Crypto Weeklies, that you're viewing the video of. Again, you can see lots of videos made on Solana over the course of the bear market and the recovery year, with several perspective, comparative analysis, retirement related model. All of the content, by the way, available on cryptoweeklies.com for free. So the only thing you could do to stay updated and support is to click a like, give a like, and potentially hit subscribe if you like to stay updated with these kind of analytics. Again, thousands of hours of efforts with respect to machine learning and regression, maintaining those models, and also creating a website. Again, again, if we look at the 1 standard deviation residual applied to the fair value, that also comes at Sol at around $155. So that is one key level to watch as Sol makes it move to the upside, somewhere between the 0.5 and 0.6 fib level, close to that 0.6 fib level, that $155 target. Right now Sol is as undervalued per this interpretation of the model, as it was back in June July 2023, when the price was at around roughly speaking $20. That's because the token has a series of higher highs, which has pushed the fair value significantly upwards. If we say that, again, if there is the interpretation that the 68th percentile move once to the downside and once to the upside is potentially where the price action could go, like it did back in March of 2024, when the token first went to an overvalued phase. Back then it was much overvalued, somewhere as at a midpoint between the 1 standard deviation and 2 standard deviation residual. In the December rally, though, although the price went to a higher high in terms of, you can see the opening and the highs for the week of January 20 was at around $270. Over here in March of 2024, the highs were at around $203. But with respect to the regression function, the March was more overvalued than in December. That's why back then the fair value was at around $67, but in December the fair value itself was at around $240. And now again, if the token were to go to the overvaluation, somewhere at the midpoint of between the fair value and the one standard deviation overvaluation, so that is an average of $320 and $600, so roughly speaking, um, around $1,000, take an average of that, it would be somewhere close to the uh, to the $500 target, or $500 mark. If we look at that from the residuals, from the Fibonacci level perspective, you would see that that represents the 2.618 is close to that one standard deviation residual at around $645, whereas if we take a midpoint, that could be somewhere between $417 and $500, close to that 1.618 from the Fibonacci level. So that's the fair value analysis for Sol. In terms of the risk reward based analytics for Sol, with the current price action, and the price action coming back to $130 from the lows that it made at around $110. Again, the risk levels per the simple moving average, this is the model created with respect to the how the price is doing with respect to the 20-week moving average. Again, even whenever this is in purple color, again there is a shorter term rally that follows. Again, even in the bear market, again a counter trend rally, usually. Again, there is just historical evidence for that, again not financial advice. At 2 data points, previously whenever the risk levels were less than 10%, again if there was a rally, then it even if there was a lower high or a shorter term down counter trend rally, the price did move again from $28 to $46, roughly a 2x, from $81 to $140, again roughly a 2x from there, that point. Again, if we were to say that, as again this is price color coded with risk levels again, and the interpretation of this model with the if there is one more leg to the bull run, that leaves the price of Sol again during the euphoria phase of that potential next run, the risk levels go between 50% and 70%, or between 0.5 and 0.7. If those risk levels were to hit in the future, and the price for Sol at that point per this model could be between $275 and about $306. Again, at the end, we try to tie everything and tune out the noise of any individual model and come up with an aggregated risk reward based analysis for Sol. So if you are interested, stay tuned for that. In terms of the regression model that we saw, the polynomial regression analysis that we conducted at the at the weekly candle level, this is the price color coded with respect at the daily price color coded with respect to that risk level. Again, this model did provide a clear cut accumulation phase for Sol back in the bear market of essentially May 2022 till about October 2023, whenever the risk levels were in this purple color zone. Again, we are currently, per this interpretation of this model as well, the risks are less than 10%. And again, if they were to go back to, let's say, that 50 to 70% environment, the price for Sol could be somewhere between between $585 and about $820. So that's this model is more aggressive, or more lenient in terms of how the price could go, whereas the SMA model was slightly more conservative per the time weighted average price model, though, which tries to identify what's the deflection of the price with respect to the time weighted average price and how risky the current market is. Again, this model also did a phenomenal job of identifying the accumulation zone where the price was below the time weighted average price in the bear market, again below the blue line, if the hypothesis is that the underlying asset, which is Sol in this case, if that is a high quality asset, and if there is a bear market in play, and the price is below the time weighted average price, where if the asset has a one more bull run in store, accumulating below the fair value, below the time weighted average price value in the bear market as a range or a zone, does help identify some of the best phases to DCA not financial advice, but again, if the hypothesis is that we mentioned is that if there is one more bull run for Sol again after when and if it goes below the time weighted average price that is currently at around $73, um, that could also usher in accumulation phase for Sol. Right now the time weighted average price risk for Sol is at around 50-50, at around 50%, slightly lower than that. If we take an average of all the models that we discussed, at least the risk based models, and identify what's the current weighted average risk for Sol and come up with a higher end of the bull run target, an estimated higher end of the ultra bullish bull run target for Sol with the weighted risk of 18%. The estimated bull run peak per all as a composite of all the models comes at around $716. And if you would like to be more conservative with that, you can take a 60% or 80% of that. So you can check over here, and 80% of about 720 would be somewhere at around $576. Again, we have a confluence at that level as we discussed throughout the video, and also a lower end would be at around $430, so slightly higher than this 1.618. That's where the $430 could be, and slightly close to that midpoint between the 2.618 and 3.618. That was the secondary target. So per this model at around $716, that gets somewhere solved between 2.618 and 3.618. And the third model, or the third target as an interpretation of all the models, comes at around 0.08. So that is 80% at around 576. That's slightly under the 2.618. So with that, I would like to conclude. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.